How's it going, everyone? Welcome to the weekly trading video for 3 weeks worth of trades from the week of 11/10, the week of 11/17, and the shortened holiday week of 11/24. Sorry, I have not been posting these on a weekly basis. I had some OBS issues after the first week that took me a while to resolve, so had to configure my parallel setup, do some moving around of some apps and things like that, get these settings right after an OBS update, but finally got it running now. So we are going to get through all the trades. Before we get into that, I just want to talk about this layout that I have on TradingView. I've kind of laid it out so it'll kind of be easy to follow along both on day trades and swing trades, because we should be able to see, for example, what on the swing trades, if I make any decisions intraday, how does that look on the charts? And on the day trades, what is the daily context and kind of what's coming up as I'm taking the trades and what am I looking at? So on the top here, you'll see that we have the SPY D1 on this top left-hand corner, the SPY M5 on the top right-hand corner, stock D1 on the bottom left corner, and the stock M5 on the bottom right corner. I'll go over these indicators pretty quickly. So on the daily chart, I have the simple moving averages, the 50, which is this gray line, the 100, which is this darker, or this lighter gray but thicker line, and then the 200, which is this white line, and that's the same on the stock D1 here. I have the 8 and 15 EMAs. The 8 is this dashed pink line. The 15 is this dashed blue line that is used for short-term support and resistance. I also have these purple lines, which are AVWAP. So this purple line here is the AVWAP from triple witching, and then this purple line here is the AVWAP coming in from the prior all-time high. So you can see that they've kind of converged at these levels here, and sometimes this TA can be redundant. But there is some, they do offer some validity here, and I use them in conjunction for my analysis. Last part here is that I have some trend lines here. So I have a downward sloping trend line, which is this sort of yellowish tan line, you could say. And I have some horizontal support levels that I use as high volume candle highs and lows. So you can see that there's a support level here from this low that we tested. Support level of this high, you can see that this has sort of been a line of sand above and below this level we've been chopping around. So that's the top section of the chart over here. On the bottom, you notice I have the volume, which is the 50 period moving average volume over here. And if there's any volume that goes above 1.25, I have a label call out over here. So this is a 2.2 RVol day. This is a 1.5 RVol day. I've been trying to get the labels sorted out. I still have to work on the script for that, but that's the setup here. I have the ATR as well, and then have this overextension indicator that basically says how far is the price away from the 8 EMA. So when price is above a threshold of about 1.5, or I guess not above about 1.5, exactly 1.5, it will become red. And that tells me that this stock or this market is overextended. So the same thing all carries over here to the bottom, except I have the real relative strength indicator. This is the one that takes into account ATR based on a 12-period rolling average. So that is this this dashed line over here that's red when it's negative, and then green when it is positive. So those are the daily chart values. I do have some indicators that I have, but I don't always put up. So for example, on Walmart, I have this indicator that'll plot high volume highs and lows based on a certain threshold. So in this case, 1.5 R volume, it can draw lines. And then also an indicator that will plot the midpoint of high volume candles over here. So I don't put them on a lot, because if you can see I put them on here, they're just a billion high volume lines everywhere. It's kind of hard to see, but sometimes I'll check them out in my analysis, maybe the midpoint, and say, okay, well, hey, look, you can see that this midpoint held, broke down over here. This midpoint, we kind of chopped around here. Sometimes they converge on other levels of support and resistance. So I can use that sometimes. And this plots the last earnings AVWAP here. This is an indicator that I found on TradingView that will do a pretty good job, although sometimes it misses the earnings date by about a day or so. So that is the daily charts. Let's look at the 5-minute charts and what I have set up, which is a little bit different. So now in the 5 minutes, the first thing on the chart is that I have VWAP, which is this gray line, and I have this VWAPs indicator. So you can see over here on every day, here is the gray line, which is the current day VWAP. This dotted kind of yellowish line is the VWAP from 1 day ago, and this dotted orange line is the VWAP from 2 days ago. So those two are plotted over here. I also have the 8 and 15 EMAs that I use as intraday charts, and you'll notice these yellow and blue triangles below. A yellow triangle means the 8 has crossed below the 15 EMA on the M5 chart, which is bearish, and then a blue means the 8 has crossed back above the 15 EMA, which is bullish. So I don't use them for entry signals as often. They're sort of a more confirming indicator is what I've noticed, but I have them on the chart. I'm kind of trialing it out. I also have these dashed lines over here. So this is my PDL, my prior day levels. So this green line means this is the prior day's high. This red line over here is the prior day low. And then if I were to zoom out a lot farther, you'd probably see the low from, I may actually not have it on here. But this, for example, this green dashed line, this is the high from 10 days. And if I have a pink dashed line, let's see over here. Yeah, this pink dashed line somewhere here. Yeah, you'll see it here. This pink dashed line is this the lowest low over the past 10 days. So I can kind of see those levels here. I can see that if it's coming up over any sort of short-term high, and this is based on the D1 chart. The final levels I have, and it's probably easier to see on Walmart over here, is that I have these daily moving averages, but they're the 1 day time frame that are actually plotted on the M5. So that way I can see the intraday SMAs as well as the intraday EMA 8s or the daily EMA 8 and 15 coming up on the chart. So I can see when a stock has bounced off that, if it's maybe coming down and testing that level, and so on. So that's what's going on the chart over here. On the SPY, I have this VOLD indicator, which is the representation of market internals. I've got this from looking at, I think Dave uses some form of this as analysis, so I was trying this out. And what this indicator does is just a measure of market breadth. So if the market is going up and the indicator is going up, then that sort of confirms some of that move that is bullish. If the market is going up and the indicator is going down or is flat, then it might be more bearish. Maybe see if I can find an example here. So you can see in this case right here, right, the indicator, the market is going down, but the VOLD is actually pretty flat, and the green and red dots represent a change in trend. So you can see that if it's above zero, there's a zero line right here. If I kind of zoom out on this, here's a zero line. So if it's above zero, that means there is bullish spread, so there's more buying than selling. If it's below zero, right, on a day like this, it's below zero, then there's more selling versus buying in the market spread. So that's the first way to read it. The second way is that these green and red dots indicate a change in trend. So the VOLD, there was 2.3 billion of overall buying dollars or volume, I think you could interpret it as that. And then this is 2.51, so it was less than that prior, which represented a move down. So it just helps me see if there's trending down or trending up. Now, and usually in bullish days, we see a lot of green dots, and then in some bearish days, like over here, you can see that we have a lot more red dots coming up on the trend. So you can use this to say, okay, well, look, we have this market is going down over here, but it's going down a little bit, but it's still pretty flat, right? It hasn't gone down a lot. So we know that this is selling is probably going to be a little more contained, although it could turn down and peak down at a moment. If we look at this sort of heavy selling day, right, you can see that this was started off bullish earlier in the day, was rising up, and then it's starting to flatten out over here. You might say, okay, well, VLD is coming down a little bit, still bullish, and then we really start to sell off here. We got a good bounce, and then we got some way more selling over here, right? And you can see that in this case, we got a bounce up here, but the VOLD did not move. And then this confirmed the next signal lower. So you can kind of use that in conjunction on the market trend. And I have this little, no, it's kind of hidden, but that little VOLD up table that just says, hey, is the trend going up or is it down right now? So that's that indicator. Um, I have this LRSI indicator that shows if the trend is going up or down. So it's a bit of a conforming indicator. These dots represent the change in LRSI. So if this is above 80, it's green. If it is below 20, it is red. And then if it's between 80 and 20, it can either be yellow or blue. So blue means that it is trending up. Yellow means that it is trending down, but it is between those two levels. So you can kind of use this um, just for some entry signals and things like that for the trade. And then I had this intraday volume, which is this is the same indicator, but as this daily volume. But what it does is that it will use the, I believe, the 20 period average on a per bar basis. So it'll compare every 930 bar to the average of the prior 930 bars, the prior 20 930 bars, and it'll calculate the average volume for that day based on those bars. Now, I think it's a little bit different than what's on the option Stalker app. I've been trying to basically align my indicator to that. But that's what it tells us. And the bottom is the same thing, except I don't have VOLD. I do have this overextension, which is a little bit less useful on an intraday basis, but it can be useful. And I have the relative strength indicator on here. So I know I just spent about 10 minutes going over the indicators, but I figured that there's some new stuff. It could be kind of important just to get everything sort of set and oriented on the same part. I mean, if you want to skip this, then I'll put a timestamp in the description. I probably should have said that before I went into the entire review of this setup, but I'll put a timestamp if people want to skip this on the description. So this is the setup over here, and I'm going to break this into 3 parts. So I'm going to first talk about my earnings time spreads, because those are a little bit easier. They're not exactly market dependent. It's more about what I did on the stock. I'll go over the swing trades that I've taken that I'm currently in, and then I will go over some of my day trades, not all of my day trades in the past couple of weeks. Maybe I'll make a separate video on that. But I had 25 day trades over that period, so it's quite a bit to go all of that in one video. But I'm going to call out, I think, a couple of key day trades that I've taken, just to give a sense of, what am I looking at here, what's working, what's not working. And they're not going to be cherry picked like trades I've won and only trades I've won. Like, I'll give some ones that I've lost in, and then I'll give some ones that I had won on, just to give a sense of some of the both the wins and the losses in that period. So I'll give all the log links in the description over here, as well as the performances overall in those periods. So those will be there. But I think just for the total context over here, I think in the week of 11/10, I was up $425, 16 wins and 7 losses. The week of 11/17, I had 12 wins and 11 losses for a net loss of $2,437. And then in the week of 11/24, I had 16 total trades, 11 wins, and 5 losses for a total profit of, a total loss of $538.83. So that was most of the, pretty much the general gist of the trends here. Let's go over the market and just what's kind of happened in these last couple of weeks. It's been a very interesting 3 weeks. So we're going to look at the SPY D1 trend over here. I'm going to zoom this in a little bit. And if we go back to 11/10, right, here's the market on the first day of 11/10, right? So we're still in this uptrend. We're still continuing this move forward, but it's obviously been a lot choppier. We have a test of the 50. We're pushing back up higher. We are not really, there's not really any super bearish signs, but we have a chance of, pushing up here on this sort of deeper retracement. We're still making higher highs and higher lows. Now we push up a little bit, we reject, we can't quite get past 685, and we fall way back below the 50. I think this 11/13 day was a very key day, because that if we had a really bullish trend, this was probably not going to happen. And the follow through this day is also a pretty key tell, because if we got this day and then we got a gap up bullish engulf here, that would have been a nice double bottom that we could really lean on and probably push up to a new all-time high. But instead, we had a gap down. Buyers try to get back up through the 50. We rejected off the 8 over here, and it looked good early in the day. Like you can see here, we had a nice move here, double top, and then we had some decently heavy selling later in the day. Like sellers took a big bite out of this move, which is a little bit bearish. And then in the next day, we came back here and we actually tested this level. We poked back below it before, having a small move back up here. So that told us there was some selling pressure. And then we pushed down a little bit lower and we got into NVIDIA earnings, which had a big gap up. And it looked like we were good before we got a nice big gap reversal that we could take some nice day trades in. They got us all the way down to the 100 SMA. Since that 100 SMA, we had a bit of a test here. Double bottom, bounced up higher, and then the market has just been rallying up from the 100. It's cleared the 100, the 50, the AVWAPs. We have a bullish cross here on the 8 and the 15 EMAs, and we are through the high minus trend line and through some resistance at 684, which is kind of the main line in the sand I was looking at, the 50 SMA and 684. If we clear that, then we are fairly bullish over here. So you can see that's what the market's done. It's put 5 green days in a row, rallying well off that move from the low. The volume was pretty decent here, and then it's kind of tapered off at this juncture, but this is a pretty tall bounce, which we can lead into as a bullish move, as opposed to something like this, where we bounced for one day here, and then we kind of had a stall. We pushed a little bit higher, and then we stalled and fell back here. Maybe this move gets retested. You can see that we've had a pretty nice bounce here, so it's likely we'll at least retest the 8 EMA and not get too overextended. But that's where we are. So if I were to summarize my market bias on a longer term basis, I'm still bullish. I mean, we had some tests of the 50, we had some tests of the 100. So to me, this feels like a closer to the end of the bullish trend than the beginning for sure. We don't want to go gangbusters long, but we have enough bullish action to be long through this weekend. On a shorter term basis, I am still bullish, but I would much rather load up or add to positions on a retest of support, whereas I like to see maybe a day of rest, maybe a kind of a hammer poke through. We poke through here, test this level, find some support, and then we push back up. So I think that retest is going to be pretty big. Given that this action has been very choppy, it's very unlikely that we're going to go off to the races here. And just stack up all the way to like 700. That seems pretty tough. I think in all likelihood, we'll probably have a pause. So here, a pullback. And we're going to see what happens over here, right? Can we get back to this high? Do we reject back down? Do we stay in maybe a bigger and longer range to this point? So right now, this trend looks to be sort of going sideways a little bit over here, right? We haven't made a ton of progress starting from September, October, right? We've really been chopping around. It's been pretty tough trading conditions in, I'd say, October from over here, like that second half of October. We had some decent ways to get long here in the beginning of November. There were some swing longs that we could have taken here. Some short-term swing longs did pretty well, but then we had some messy price action in the second half of November. So pretty tricky, and a good times to generally, in my opinion, lay low on the swing trades and stick to day trading. And, just kind of wait and watch for that next window. I think if you're any sort of swing trader doing this part-time, you're not doing a lot of trading, you're pretty passive. If you're a full-time trader and you're also day trading, there's been some nice volatility to take advantage of. There's been some nice stocks moving both ways. You just have to pick your spots and know your setups, and not sort of get caught or overcommit in a move, right? I mean, this is a dangerous situation where, like, I mean, if you're aggressively short here, you can get totally just, wiped out on the other side on the big move up. And specifically, if you're like, I was long here, and I had to take some losses on this move lower because it broke through a lot of the stops, and I didn't have a lot of clarity on what the market was going to do. So definitely some tricky conditions, but we have some clarity in this last week with this nice move up higher. So we're leaning on the strength of this move, and that's where we are today. So with that, let's go over first the earnings time spreads that I have taken over the past 3 weeks. And this is a pretty nice strategy to take in these conditions because they are market neutral. So it doesn't really matter what the market's doing. I'm just trading the setup on the stock, right? And oh, got to do both open and closed here. All right. So first time spread that I took, and I'll pull them up over here, even though you may not necessarily see the stats on the screen, but first one I took here was SMR. So SMR, I took the 34 time spreads and took this on 11.6. So I took the 34 calls on SMR. And for every earnings time spread, the setup is you want the stock to exceed earnings less than 20% of the time, and you want an IV crush of over 40%. And this IV crush is the IV of this week's at the money calls or puts. Let's just use calls for example. So this week at the money calls minus next week's at the money calls divided by this week's at the money calls. So if this week's at the money calls is, let's say 200, I know it's 2.0, but I'm going to call it 200. 200. Next week's is 80. And then you do 200 minus 80, which gives you 120. And then you do 120 divided by 200, which gets you 60%. So you want that difference to be over 40%. So SMR had an IV crush of 50%, which is great. And the other thing typically to note in these time spreads is that you typically pay close to about 1% of the price of your strike. So these 34 calls on the time spread, I would have expected to pay about 35 cents, maybe 40 cents for these, but they're running at about an 80-cent debit, which means that these were very, very high IVs. These high IVs meant that the market makers were pricing in a big move. They didn't exactly know what SMR is going to do, so they're juicing up the IVs to juice up the price of this time spread. Now, these bigger IVs can also mean a bigger IV crush and potentially a higher profit potential. So I took the 34 time spreads for an 80-cent debit. I took 5 contracts. On the time spreads, my max risk or my total debit is about $500, which is about a half size versus my normal swing trading size of about 1,000. I mean, I could probably run it at 1,000 too, but I'm pretty comfortable at the size over here. And for some of these, I mean, if you're trading like 10 cents and your debit is like 500, then you might be taking like 50 contracts. So, that's going on there. So that was a setup. And the other thing on the time spread, by the way, on this versus the exceed earnings and the IV crush is that you usually want some decent option liquidity. That definitely helps. So the option liquidity of this was 4. And this is based on the option Stalker value of option liquidity, which can be pretty helpful. So that was SMR. Got in on this trade at 80 cents, and I put an order out to try to fill on the same day at $1. So if I can get a 25% gain on the same day, I usually take it because then I have a pretty decent win, and I've taken the risk off the table in terms of losing on the time spread. So SMR gapped down on the 7th, and the market had gapped down, but then it had a nice little hammer, and it was looking pretty good, but we did have this 200 SMA in the way of SMR, which has kind of made it tricky, right? This puts sort of a ceiling on that stock, and I will pull up SMR over here so you can see what's going on that day, right? We had a gap down, sold off here, and then pushed it back. It didn't have a huge beat initially, but then it did sell off, I think maybe pre-market a little bit. Now, I still had my order out, and on the open of the 10th, on this gap up, I got filled on that order at $1.03. So basically what happened was that since it was a Thursday when I took the spread, the short calls of that spread expired for a full credit, and I sold the long calls for a loss, but that loss was less than my credit. So the total credit I got from the short calls was $2.67, and then the net loss on my long calls was $2.42. So my net profit was 25 cents, or a 30% gain, roughly. So That was a pretty nice win in SMR. And let me take a look at the next one here, which is Cisco. So Cisco, another decent one. Pulling up the stats for Cisco. Here we go. So in Cisco, took the 73 calls for a 28-cent debit. Took 20 contracts. It was a good setup. We exceeded earnings 13% of the time, which is less than the 20%. We had an IV crush of 42%, which is higher than the threshold of 40%, and an option liquidity of 6, which means that you could take a lot more contracts and you had some tighter spreads that you could work with. So this was a good setup. We had a big pop-up early in the day on Cisco. It exceeded the earnings and was looking to see on this initial pop-up if it would come in and fill in this gap. There was a chance, but you have to give it some time. It's really hard, you're not really sure what's going to happen in the beginning of the day. So we got a push up over here, then it came back down. Try to get through this here, and you can see the market was pretty bearish on this date, right? Very, very bearish on the 13th, but Cisco wasn't able to, wasn't able to get knocked down. So I exited in 2 bursts. So I exited about half of the position at 20 cents, and then the other half at about 18 cents. So I think 20 cents was somewhere here, 18 cents was somewhere here, which was an average exit of 19 cents or a 9-cent overall loss on the position, which is 32%. So again, that one beat to the upside, and the tough thing is that when it beat to the upside, you have a chance of your short calls getting exercised, right, or getting executed, I should say, which means that you could be short Cisco. You can be short Cisco at whatever, at that price of $73. And what you probably have to do is just close the overall spread for a max loss in case that happens. Now, so that's sort of the risk on the upside, but Cisco, we just took the loss as is. There might have been a chance to exit better on the open on the next day, but it's sort of hard to tell. I usually don't give it another day or so on the upside. But that was Cisco, so we took a loss on that time spread. Next one here is AMAT, which looks like I typed in wrong. And as just another point of drawing on this chart here, this purple box is a gap. It's a big gap that I have from over here. So the top, I do it from the close of one candle to the opening of the next candle. That represents the gap to me. So you can see that I enter the gap, and then there's some resistance. It's chopping around here. There's a high volume line here. So there was some. That's what's going on over here in AMAT. So AMAT took the 220 calls for $2. I believe $2.28. Let me check my values here. $2.45. Sorry, that's what I got it in for. So took AMAT for $2.45. Exceeded earnings 20% of the time. The IV crush was 50%, and the option liquidity was 2. AMAT had a big gap down, and then it actually rallied on that move early in the morning, and I got out of that trade at $2.80, which was about a 17% profit, 35-cent profit. So not a huge win, but still a pretty decent win. It did end up filling the gap all the way. And you probably could have gotten out for like a 50 to 75% gain later in the day on AMAT. But I, just took the win when I did. And, not exactly sure what can happen. You could have a move that goes up and then it falls back in over here. So it can be tricky when you are in these, big gap down situations. Kind of just have to watch the price action there. All right. Next one I took was TJX, TJ Maxx. So this one, let me pull up the chart on TJX. All right. So TJX, I believe on this chart, I don't have the stats on me, but took this one on the 18th. and took the 146 calls on TJX, which was somewhere around here. Now, this stock exceeded earnings about 13% of the time. Options liquidity was pretty good. It was around 4. And the Ivy Crush, when it looked initially at the trade, I thought it was over 40%, but it was actually closer to like 35-ish percent, which is not terrible. Like, it's okay, but I'm pretty strict with that 40% criteria. So I took TJX over here on the 18th, and I got in initially for a 41-cent debit, and I took about 10 contracts of that, and then I got out at a 45-cent credit on the same day, so it was about 4 cents. So it took about a 10% win on TJX because, I was like, well, I thought I had this criteria, but I didn't. So my confidence in the trade has just gone down. I'll just take 10% and, get out of the way, see what happens. TJX did come in and fill in the gap. So we did have a decent amount of crush the next day. And that is the 19th. So that's a Wednesday. So you're probably going to got maybe like 25, 30%. But to me, the point was that I didn't have the criteria of the trade. So I got out of the trade and reduced the risk. In this case, I might have been right. But if this was wrong, then, what would that mean? Like, how would I react in this situation, right? I might have been kicking myself because I should have got out for the small profit when I had the chance. So I'm just sticking with the criteria that I have and not letting that, if I don't hit that, then I'm out of the trade and I try to get out for a scratch or a win if I can. But that was TJX. Zim. This was another time spread that I had taken. I'd taken the 17 calls, and I'd taken this on the 19th. So just pulling up Zim over here. There we go. So exceeded earnings 0% of the time. The IV crush was 45%, and the option liquidity was 6. So I took the 17 calls for 12 cents, and I took 50 contracts of those calls. Zim the next day, pretty flat. You can see that here's Zim on the 19th, and then here's Zim on the 20th. Closed pretty much right where it started, and got out on the open. I had an order out for 15 cents. Tried to get a same day fill, couldn't get it. On the open next day, I saw that it was pretty much right where it was, so I raised my target to 16 cents. Looking to get a 33% gain here, and on a Thursday, and then I actually got out for 18 cents on the open, which was a 50% profit on Zim. So that was a really nice win. On Zim. And look, that's the best case, right? It opens up right where you are, you get filled right in the open, and then you don't think twice, and you get a really nice 50% on that time spread. All right. Next one that I took was Gap, and I took this on the 20th. Took the 2350 calls for 2350 calls for 16 cents. I took 30 contracts of that. It exceeded earnings 20% of the time. The Ivy Crush was 58%. The option liquidity was 8, so very, very high option liquidity. I got in at 16 cents towards the end of the day, around 325, and I actually got out, and I know that's the gap chart. I actually got out. I put an order out again for 20 cents and looking for like a 25% move, and I got that filled pretty quickly. I believe, let me check the exit times on Gap here. Yeah, I literally got out 10 minutes later for a 25% gain, which I was like, yeah, I'll take. So it ended up having a gap up, small gap up overnight, but pretty flat. But you could have taken 50, 60% on these time spreads, and would have been pretty good. So that was Gap, and last couple of time spreads over here. First was BBWI. So on BBWI, taking the 21.5 calls on this stock, and let me just open up this. Yep, took that for 12 cents. So took 50 contracts of that. Option liquidity is 4. It exceeds earnings less than 20% of the time, and the IV crush was greater than 40%. So had the criteria, had an order out for BBWI on the same day for 15 cents, a 25% gain. No dice on the same day. And then overnight, you can see we had a really big drop overnight. And then what you do in this case is because it dropped really hard, the short calls will expire worthless. And then you're just holding on to the long calls, see if we get some sort of bounce. Your best case is probably early in the session, right? Like what happened in AMAT. So if we fill it up really early in the session, that's your best case. And you really don't have to get to like 21.50. I mean, if it comes up over halfway to like 18, 19-ish, you can probably at least get out for a scratch. But yeah, that didn't do anything, and then it expired worthless on the 28th, where just didn't reach enough. Long calls expired worthless, and then took the max loss on that position. So that was BBWI. And last one that I am in is HPQ. So HPQ time spread took the 25 calls at 14 cents in the middle of the day, and took about 50 contracts of that. And the spreads were moving around quite a bit on HPQ. And the IV, what I saw, was pretty good. It was about 39.8%, so kind of right on that threshold. It exceeded earnings 13% of the time. The option liquidity was 8, so pretty liquid options here. So this was it on the 28th. So it was kind of moving all around the place. At one point, it was like 15, 16 cents. So I bid lower at 14 and I got filled. It actually dropped all the way down to 10. So it was moving really all over the place, hard to get a fill. And I was bidding at, I think, 19 cents to see if I can get out of the trade for a decent profit. Did not get that. So I think it moved up maybe to like, I think I moved it to like 21 cents in the beginning of the day, and then it kind of just stalled and didn't really do too much. And you can see that on HPQ now. After it stalled, it's kind of bouncing back up, getting pretty close to 25. It's got to get up over here. The market is pretty bullish, and it's getting through the 8 and 15 EMAs on the D1 chart. So I think it has a chance to potentially get up through here. If I were to draw this chart here, you can see that we do have a bit of a gap that this stock is trying to work through. So that's going to provide a little bit of a ceiling over here on the stock. Yeah, so these short calls that I had at the 25 short calls expired worthless for a full profit. And I have an order out on the long calls at 19 cents. So we're going to wait and see what happens with there, see if I can get a pop-up on those calls earlier this week. That would be preferred. And if not, then they'll expire worthless, and then I will take the full loss on HPQ. So those are the earnings time spreads for the last couple of weeks. And now let's switch over to the swing trades. All right. First, swing trades. And this is where our use of the D1 and M5 charts will be handy. First string trade we'll talk about here is IBB. So this is one called out in the Right Line trading chat room, and it took this initially on the 31st of October. So here's the setup in IBB. Put that on the chart. So you can see how pretty much what it looked like here, right? Market pulling back down, IBB just grinding higher, ignoring the market. This is the biotech ETF, and it's going to be a little bit more independent of the market, but very strong, orderly price action chart. And also what's nice is that versus trading individual biotech stocks where you have to be more aware of certain news releases, what catalysts are driving it, etc. IBB will be resistant to that. I mean, it might be affected a little bit, but you know, this is an ETF, right? So that individual stock exposure is going to be dramatically reduced. So took it over here and took the November 21st 155 calls for $6. Where was it here? $6.30. So took it right over here. Now, market had a bit of a pullback, right? Pullback all the way to the 50. What did IBB do? We're leading on the 8 and the 15 here, just grinding up, holding, 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 holding. Right, this is what we get. We're holding here. Market down, stock flat, excellent relative strength. So on this day, on the 3rd, I add to IBB and I add the $5 calls at the end of the day. And the reason I add to that trade is that if you see over here, right, IBB comes back down. We have a decent little volume drop here, but nothing crazy in terms of a D1 chart. Test the 15 EMA, bounce off this level, get back above the 8, test, get back above. See, we have a test through VWAP, test to the 8, and we kind of close and form a nice bullish hammer for the day. So that's pretty bullish, right? Because we erased a really big chunk of this move. More than half of this drop down was erased. And we know that it's a little bit of a choppy stock. It had to test some level somewhere here, where it found there was over here, found some liquidity, and move back up over here. So added to the trade at $5. So now I have my average is 2 contracts at $5.65. So IBB's chopping around, market's chopping around, right? It's just moving lower and lower. And then we get this nice breakout on the 11th. And this is where I exit the trade. So it's not actually on the first day, but it looks like it's the second day, this day over here, which is interesting. But we get this really nice breakout. So we have IBB essentially grinding up here, but that's just kind of this compression, right? And we get the market tail when we get this release, this compression, massive, real heavy volume on the 11th, and just trading straight up. So on this stock, I scale out of this position. I take the first half off at 1045. So it's coming up over here, 1045, kind of hits a profit target over here. And I take half off. But I noticed that this price action is pretty strong and the market is still pretty bullish at this juncture, right? We've broken back above the 8 and 15 EMAs. We're back above this all-time high VWAP. We're back above this level at 674. We're back up a couple major levels. So just kind of grinding up higher, hits this target, take one half off. And then I'm riding the next half off, and I take it all the way off over here at, I think I take it off here. Gets off at 1135, right? And I'm like, hey, this has made a pretty nice move, and it's made about a 1 ATR move. And I was like, well, it's an ETF. I don't know how much longer it's going to go up, so just going to take it off into some strength here in a 1 ATR move. So take the second part off at 780. So the first one I took off at 730, second one at 780. So average win was $1.90 per contract for 2x, which was a pretty nice win overall. Ended up being a pretty decent, I think about a 30 something percent win. Yeah, 33% win overall. And this one I could have really held all the way until probably, the end of the day. If you look at it, it never quite breaks the 15 EMA, right? There's the 8 EMA, it comes back, tests the 15, kind of grinds back up. So you could justifiably hold it until the end of the day, maybe until about here. You can take it off at 165. In this case, it's probably close to like $10. So that could be a 100% move on IBB. So there's maybe a little bit of longer holding I could have done, just leaning on this trend strength and just using these rolling stops to ride out some very strong trends here. But there's also some nice context where it broke through this compression. So I had a lot of latitude to lean on that compression break over here. So that was IBB. That was a pretty nice win on that stock. Next one that I took was Apple. This was another one called out in the Right Line Trading chat room. And this was taken on the 6th. Took the 21st 265 calls for $9.50. So it broke through this compression and this earnings AVWAP over here. That's why I liked it. broke through here, came back, tested that level, and then it bounced off that level. So that's when I took it over here, bounced off this level. I got it around 950. Stock kind of just chopped around here, chopped around, chopped around. And if you look what happened on that day, here's the context, right? Market selling off real hard on the 6th. Apple holding up pretty well, right? I mean, it gets dragged down a little bit by the market, but holds up pretty well. There are some buyers here in the stock. And when we get that release on the 11th, we get a final pop up through that compression. If I go to the 11th here, right, we get a test, didn't get knocked back too hard, and then we push up higher. We take profits on Apple, and I get out at around 304. So get out right around here, I think on this hammer, get out at 11.85. So it's a $2.35 profit per contract on that position. So that was a pretty nice look on Apple. Next one that I have here is EOSE. So EOSE, here's a setup on this chart. You got a really strong stock breaking out of this compression through this downward sloping trend line. Got a nice amount of relative strength here. And the market is popping up. So it's a pretty nice move in this stock. You want to see it kind of crack through this level at 19. But it's looking pretty decent here, right? And look at the strength of this move. I mean, this is just non-stop buying, 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 buying. I mean, this is just crazy, right? So I get in on EOS. So just take a starter position. I take the 12, 19, 14 calls for $5. And I take a starter because this is a deeper drop, and we just have the first move on confirmation, so I don't exactly know what EOSE is going to do. So market bounces here, and it rallies up a little bit, but you can see that after this, EOS doesn't bounce up as hard. It's kind of just meandering around over here. So the market eventually starts to tank, and it starts to roll over here. I'm leaning on support on EOS right over here at $14. You can see here's this pretty big level of $14 of support coming in. I mean, if I were to draw that line right here, right, ton of support right there. You can draw it here. I mean, you can draw a whole bunch of lines, right? There's just like a whole bunch of little kind of support zone here, right? So that's what I'm leaning on here. And you can see that on the 14th, we're closed right on that zone, right? And then on the 17th over here on EOS, we are at the 50, and I want to see EOS at this level. I want to see it bounce off the 50 and push up higher. Here's the 50 SMA right here on EOSE, right? Now, the market is definitely not helping at this juncture, right? EOS is getting dragged down by the market. And market just not really doing a whole lot, right? We have a break of the 50 SMA, which I was leaning on, break and close. EOSE also a break and close of the 50 SMA. So I get out of the trade, and I take the loss at $1.33 at the end of the day. And the reason for that was that it broke through my support. We got a break and close to the $14 level, and a break and close through the 50 SMA, as well as a new pivot low. So that tells me that I need to get the hell out of the trade, and I don't know what's going to happen because I got the market wrong, and the stock did not hold up as well as I needed it to. So that was EOSE. Next one over here is U. So I took U on the 10th, and I took the 12, 19, 38 calls for $6.70. Now, the setup on U was pretty nice. It had this nice kind of J hook over here, getting through the IPO AVWAP, which is this purple line. It's been really beaten down, right? Like, I mean, this stock has had a lot of tough times in terms of selling, peaking as high as 200 here, getting to as low as 14. So it's been on quite a wild ride. But on a technical setup here, this is a pretty decent technical setup. And it had room to about $47. So this was the setup at the time on U, not too overextended, some decent volume coming in through here, and pretty nice and relatively strong on this. And I had a, put this over here, right? I had a nice little market tailwind, right? So this is a pretty nice setup in the market and in the stock. Now, when we know what happens to the market kind of gets dragged down. You also gets dragged down, and I'm leading on a whole bunch of levels here. You can see there's this whole cluster of support, the 8 and 15 EMAs, these AVWAPs, this 50 SMA here. If I just hide some of the, just hide the drawings just so it's a little clearer. Right, you can see that. All right, look, here's the 50, here's the 8 and 15. They're all kind of clustering. So they all sort of cluster around $40, right? And this high volume support at 37-ish. So a whole bunch of support here and just waiting for it to kind of lean on that. We get a break down below the 100 SMA, which is what I don't like on the 14th. And then over here on the 17th on U, we tried to poke back above this 100 SMA. And then we actually fall below it. So I believe here, yeah, we end up falling kind of below it over here on the 17th, and the market closes below the 50. So this is when I get out of the trade and I exit U at $2.27. So again, another starter position on this guy. Wasn't a full loss on both of these, which mitigated the total P&L impact that I had. But again, pretty straightforward story. Had a good setup, got the market wrong, got the stock went against me, and then it was kind of right at technical support. We had a break and close below my levels. So, just got out of the trade. If you see, obviously it did end up recovering, but at this juncture, you're thinking, okay, I mean, after this candle, right? After this candle, are you predicting that U is going to recover and the stock is going to recover? Because if you are, then hold on to the trade. But I wasn't predicting that. I had no idea what the hell was going to happen in SPY and in U. So I was pretty happy to have taken the loss here. If I got this gap up, I also probably would have taken the loss as well on this stock. But yeah, I mean, just didn't pan out. And this is one where you could easily result and say, oh man, like pretty much got back up to my price here on the 26th. Market's rallying up pretty well, but it's just bag holding and babysitting this loser, right? Just get out of this trade. It lost. It's a loser. Get out of the trade and just try to get another nicer and better trade. All right. Last one I had here was GLW. GLW. Took this. This is on a right line trading room as well. So this was called out on the 10th. And you can see here, again, this is decent setup in GLW. It's a little bit choppy. I was a little bit aggressive, but it was still a decent setup here. You can see that this stock has been pretty flat, but very, very strong trend. It had broken above the 8 and 15 EMAs here. Took the November 28th, the 86 calls for $4.35. Took 2 contracts. This was a full-size position in GLW. And had an order out on this stock for $5.50, I think. So decent, like 25-ish% win. Got really close on the 12th, but then ended up closing on a hammer. And then on the 13th, broke through the 815 EMAs, real heavy volume, right? We got this really big selling day in the market. Broke through this, broke through a whole bunch of support that the stock had at $83. And if where's my toolbar? Put that in here, right? So there's a whole bunch of support. You can see it's testing this level. So broke through that support, broke through the 50 SMA. So after it broke through the 50 over here on some heavy volume, and it was pretty late in the day, took the loss on GLW at $1.26. Closed it at around 207-ish, so kind of somewhere around here as it broke through those levels. There was maybe a chance to short the stock on the downside and get a little bit of your money back. But again, this was a decent look in the market. Decent look in the stock, but we got this big, heavy selling pressure back into this choppy range. GLW took a big hit, and it also starting to, might be rolling over here on the D1. So it's not as, this trend has sort of matured versus from what it is now to versus what it was here. And I might need just a sort of a longer, deeper pullback to get back in it. So, what I would do if I were setting some alerts on GLW is just drop a trend line over here and just create an alert. All right, so if it breaks through that trend line, you'll have a pretty nice setup on a longer term basis for the stock. And you also have this AVWAP coming in from, I think, this 1010 candle that may or may not be relevant here as well. So that was GLW. Let's look at the next one, which is Open. So Open, here's a setup on this chart. Took this on the 12th. So took it right here. Market, again, bullish at the time. And also we did not have this downward sloping trend line, right? This downward sloping trend line looked something like this. So it looked like it was already broken. So that was not in play. It was in play afterwards. Open had held up pretty well, right? Here's the decline on the stock. You can see the decline on Open. And then we got a really strong move up on the stock with good volume, nice relative strength. Had some room over here to about $11 or so. So it broke through pretty much all the levels you needed to. This high minus trend line, this big AVWAP coming here and acting as a moving ceiling through the 8 and the 15 and through the 50 SMA. Also structurally, it was through this long pullback phase over here that was coming on. We had this push up higher here, and I took some nice profits on this move earlier. Pullback, set up again over here. It started over here on the 14th. So I took a really nice move here from the 14th all the way to the 22nd. I think it was probably one of my biggest ones of the year. And then kind of grinded up here, pushed up again on the 11th. This looks like it ended up being a buying climax and had a super long pullback for a many long period of time. So it popped over here and then it failed that pop. Now, the interesting and weird thing about Open was that there was some like weird buyback or something like that, but I was long the December 19th $7 calls on Open for $2.65. I had 2 contracts, so it was another starter position on the stock. Because when I got it, you can see it was a little bit overextended. The overextend indicator was slightly red at that time. So it's just a tiny bit overextended, but I thought this was a good stock and market setup. So I went long the stock. This stock fell back, back tested the 50, back below this AVWAP over here, and through the 8 and the 15 EMAs. So it was starting to be technically bearish here, but I couldn't easily get out of the position because the calls that I had were switched. So I originally got these Open $7 calls, but after this weird, share buyback thing, there was Open calls and there was Open 1 calls on the option chain. And I had the Open 1 calls. And because there were these new calls in my Trader P&L, it basically said that I had these calls at $0 and I sold them for whatever the price was, right? So basically, and I couldn't actually put a normal order through the Trader website. I had to call my broker and ask them to put a GTC order on the stock and wait for that to execute. So that executed, I believe, on the 25th. I could be mistaken, but I believe on the 25th. So I got out of Open at $1.05. So it took a $1.60 or $1.60 loss per contract on Open, which is probably about a 60% loss or so. Took it around here. So technically, I mean, I took the loss and I took the loss, and broke my thing. I got the market wrong, etc. Sort of the same story. But it was just a weird situation in terms of the options here. But you can see, I mean, just a really strong, really nice move in Open here, just steadily grinding up. And was pretty good setup at the time, but just didn't work out since we had the market that ended up going against us. Okay. Next one I had was MU. So MU I took also on the 12th. And again, this was a setup on MU. This was a really strong, this is one of the best charts I could find, right? Here's a stock that is just grinding up on this channel, hugging the 8 and 15 EMAs, just pushing higher and higher. So I took shares on this stock, and I got in on this level on the 12th because I felt that it, you know, I was like, all right, it was close to the 8 EMA here. I'm not chasing it at the all-time high or at the high over here, which was like close to 260. I want to get it on these kind of tiny moves to the 8 EMA where I get a better price. And then I can ride the trade out over here for a nice profit as it goes back up. So I want to get it on some sort of 8 EMA touch over here. So I get it in, and I'm long at 245. So kind of right in the middle of the day, I get in right at VWAP. And here's MU, kind of right at 245, chopping around here. Now market starts to sell off and gets pulled down here. MU holding up beautifully, and then it does push up over here, actually all the way to 260 before it gets kind of slapped back down over here. So I'm still in this trade because at this point I'm kind of waiting to see. All right, well look, market is still looking bearish, but MU is actually my best performing stock relative to this market. So my best thing is probably to stay in my winner, right? Stay in my winner at this point. See how it goes. But market looking pretty bearish, and because I decided to stay, take a hit over here, MU starts to creep back down over here. We get a break and a lower low, so we get a break at the 8 and 15 EMAs, and we break through this prior low over here from the 13th, which is mildly bearish. So you see, it closed the day around 228. This is a mildly bearish situation. So now I'm like, all right, this is not looking great. What I want to see is MU really push back up over here, and it doesn't, right? We get this move back down here. MU tries to push back up to the 15, gets rejected, and forms a new low. So I get out of MU at 217, and I am just going to pull up the chart. There we go. Yeah, sorry, 218 is when I get out of the trade. So I take a $17 loss per share. And it does end up bouncing, but I avoid this really big, nasty green day. Now, it does pop up a little bit from NVIDIA earnings. I think over, where was it? Over here, yeah. So I have a chance to get out probably at like 230 and get out of the trade for a slightly better loss, a little $15 loss. So not as, I guess, better, but, still a loss. But yeah, really huge selling day. Very heavy selling, comes all the way down to the 50 SMA and tests that level. And then it bounces up and it just starts to rally a little bit later. So we get this sort of bigger flush over here. And then that eventually gets gobbled up, although it's not been super strong on that gobble up relative to what the market has done. So that was MU, just for the recap. So I got in here at 245 and I got out here at 218. For a $28 loss, or about a this point, yeah, probably 1.5 ATR loss. So, again, I mean, it was a good pick. I had maybe the hindsight is you could have your chance to get out, but I'm just leaning on this 8 and 15 simply. And if that broke technically, then I'm out of the trade. There's other chance where it's like, hey, look, I mean, this looks good, and then I get a nice long green. I might get a nice green candle like this, right? What if I get a green candle like that, and then I'll be kicking myself for taking the loss in the trade when I could have stuck with it, right? What if we had a green candle here, another green candle pushing up to 273? That's what I was looking for. We didn't get that in time with the market. So, yeah, I mean, just some tough stuff in MU. But it happens, take a good trade, and either it works or it doesn't work. All right. Next one here. Let's get into some fun ones. A Schwab weekly at the money. So this one was originally taken on the 24th of October, and this was closed on the 11th of November. So we'll get weekly at the money. Typically, you want a couple of things. You want stocks with first weekly options, decent option liquidity, a stock that is a price pattern that is bullish to slightly neutral, and on some sort of bullish catalyst. Now, Schwab doesn't really have the bullish catalyst, so it's not the typical setup, but I think it was called out in the right line trading room, so I took it, just kind of see how it works. Ended up working out pretty well. But let me get the setup on Schwab over here. Here we go. Okay, so here's the weekly at the money. On the 24th, we bought the December 19th 92.50 puts for $2.47. We sold the October 31st 95 puts for a credit of $1.28, so a net debit of $1.19. Two contracts. Now, your total risk is your debit paid plus the spread between the strikes. So my total risk here is going to be $2.50 of the spread plus the $1.19, which is $3.69 per contract of risk. And that will change every week because your net debit paid can vary, right? But and also if you change up the strikes, you can also change with that risk profile as well. So that is Schwab. And the first week, and you don't really do anything until like the Thursday and Friday of next week. So I took it on the 24th, not really doing anything until the 30th, 31st. So on the 31st, we had closed those 95 short puts at 75 cents. So that was a 53-cent gain, a 53-cent credit that we have so far. And then we sold the November 7th 95 puts for a $1.52 credit. So now my new net debit is just going to be whatever the current value is of those 12.19 puts minus whatever I sold the 95 puts for. In this case, it was a net debit of 95 cents. So my risk currently was 95 cents plus $2.50 for the new week. So it can be a little confusing when I'm sort of just talking about it, but if you do a couple of these and you just chart out what's your risk, what's your net debit, how much credit do you have, and so on, then you can kind of track how well you're doing on the trade. And so as you kind of do it week by week by week, your credit adds up, and that'll eventually overshoot the debit you can pay, and you can close down the spread for a nice win. So did that on the 7th, and then we sold on the 7th here. We closed down those puts at 75 cents. We took a 77-cent credit. And we sold the 11/14 95 puts for a $1.87 credit. So now we've banked in $1.30 of credit. So as long as we close the short puts for more than that, or the long puts for more than that, we should be able to have a nice profit on that trade. Now on the 14th, Schwab is looking good, but it starts to break through, on the 11th, right? You can see Schwab starting to break through this pattern here, getting a little bit bullish here. So we close down the spread. The 11/14 puts, we buy them back at 70 cents, which is a $1.17 of credit. And then we closed the long puts, the 12/19 long puts, for $1.71, which was a 66 cents loss. So how does this all add up? Well, what you do is you just say, what's the total credit I got, which ends up being $2.47. What's the loss on the out of the money long puts, which is 66 cents, and then you do 247 minus 66, which gets you net profits of $1.81. So I've basically $1.81 credit per contract overall on the spread. So pretty nice win in Schwab. Pretty much went flat sideways. You can see just not really reacting too much to the market one way or the other, until I guess it did. But when it got too bullish, we got out of the trade. And if it got too bearish, we would close down the short puts, and you could ride down the long puts and take profits on that. So it gives you a lot of optionality on these kind of trades. So that was Schwab. The next weekly at the money, that I took was on SoFi. So I took it over here on the, let me double check here. I just took it over here on the 10th. And I took it for I took the 30 puts, the 30 short puts, and the 2750 long puts weekly at the money. So I sold the 11, 14, 30 puts, and I bought the 12, 19, 2750 long puts. Total debit of 44 cents. And I closed that on the 12th for a total debit of 66 cents, which is a 50% gain, which is a pretty decent gain on my total debit. Not my total risk, but my total debit. Total risk on the trade would have been closer to $3 because of 44 cents plus a $2.50 of width, so $2.94 of risk on a weekly basis for that trade. So close it up since it popped up over here. It was a decent chart in SoFi. It was decently bullish, but it did have some big candles here. So that was, something that you wanted to be careful of, but took it and ended up being a nice exit because kind of had a big move down and then a big move back up. So you kind of throw the weekly at the money into a little bit of a haywire situation. All right. Next one. Oh, every time I do this on Hal, I got to go to Halliburton. Halliburton. Okay. So next one, weekly money took was on Halliburton. And this was the setup that I had taken at the time. And I'd taken this one on Hal on the 14th. So this was I took on a Friday. This is a pretty nice setup on Hal, and this is what I liked. So first we got this bullish catalyst. We're through earnings. Stock is just moving sideways, and it has been pretty much ignoring the market, right? It's been ignoring all this move. It's just been moving sideways. It's an energy stock, so it can kind of have its own agnostic movement. It'll still be influenced by the market, but they can sort of do their own thing. So on Hal, we took the 26 puts expiring January 2nd, and then we sold the 11, 21, 2750 puts, and we took that for a total, let me find this over here, on HAL. There we go. So bought the January 2nd, 26 puts for $0.85. So 85 cents. Sold the November 21st, 27 puts for 56 cents. So net debit of 29 cents. Total risk is $1.50 for the width of the strikes plus the net debit of 29 cents, which equals a total of $1.79. And the plan here is like, look, you're plan to stay in this for 2 to 3 weeks. If it gets too bullish, you can close the entire spread. If it gets too bearish, you can leg out. So this is kind of trickling down for the rest of the week, and then we get this big red candle on the 20th, which obviously throws in a kind of a big mess into this. And then on the 21st, end up closing the spread for a loss. Now, typically, typically what you want to do is you want to be able to leg out if it starts to break down its structure. But the problem is if you leg out over here, the stock is pretty much right on the 50 SMA, so it could too easily bounce. You don't really have a lot of runway to leg out unless it breaks down through the 50, and then you take it there. So got out of this spread here for a loss. And let me check how I closed out that loss. Yeah, so I got in at a 29-cent debit, and I bought it back for 80 cents. So it was a 61-cent loss per share. It'll be a little more. There's a little more to it, but yeah, essentially about a 65-cent loss per share that I had. Now the max that you could lose on that, it was about 50% of the max. So You could definitely lose a lot more, but yeah, I mean, when this one just didn't pan out, it was a good setup again. But when we got out of the spread here early in the day, just wasn't a lot of runway to the 50, so was hard to get out of it. There's also this gap support here, high volume candle here, some high volume candles here. So there's a couple of these support levels that I'd hit from the drawings that were coming into play. So yeah, just broke the structure, had no runway, and we had to close that one out. Okay. So that is most of them over here. I will talk about the last one I took on here, which was SPY, and I'd taken this on the 11th. And I'd taken the 1128 686 690 CDS for $1.95. So took it here, and I was pretty bullish on the market at this juncture. So just looking for a move to the all-time high, which would have yielded me anywhere from a 40 to 50% profit. Now, obviously, did not pan out. We got it stalling over here, and then we got a sell-off over here. And I was just still holding on to this, waiting to see if we get a pop-up on NVIDIA earnings. We get this pop-up, which is looking good. And then on this gap-filled reversal, it starts to get very, very bearish. So I exit out of that SPY long over here. I got out for about 22 cents. So took a pretty decent loss on that, about an 80%, 88% loss, 89% loss on that SPY trade. But yeah, I mean, again, I had the setup that I wanted. But when you're trading SPY, it'll be a big boost if you get it right, or it could take you down if you get it wrong. So there is some nuance to that, and a lot of times what I did would have ended up working out pretty well. And you could even take it maybe as an overnight sort of swing trade over here if you wanted to keep it pretty brief, which you could do it. But you can see here, right? Buying opportunity, buying opportunity, buying opportunity here, buying opportunity here. There was a buying opportunity here, even though this is kind of a choppy move to buy into. So the reaction here is maybe is the context of this trend. You can't maybe ride it as aggressively. But yeah, I mean, I wasn't too upset about that move here. Took the play, and then that one just didn't work out. Couple I took this week here. Took a spot PDS over here. Let me get it here on over here. All right, so spot PDS, I took it right here. This is a bearish stock on that day. You can see here SPY. SPY is bullish, but it's rejecting off of that 50 SMA, so that's where I took it. Spot was looking pretty good, albeit potentially overextended at that juncture. And then it came back and it roared all the way back, went strong against me, tested that 8 EMA, bounced back, and then it couldn't quite get through this support level at around 580. I had a chance to get out of the trade. I couldn't quite out of the trade. Bounced back up to the 8, and then I just ran out of time on my time spread. Now, it's still looking pretty bearish on the D1, so just a pullback. And I think it honestly might go lower, but I don't have the market in my favor. Market went strongly against me, and didn't get the right timing on spot, so that one kind of went strongly against me as well. So those were those two trades. I'm going to go over now which trades I am currently in. So first one here is Lily. So Lily, I'm in a starter position. I got in at 1100 on Lily. So I have 5 shares of that. So I can take probably about $100 move against me all the way down to about 1,000 over here. So I can take a pretty decent amount of heat on Lily if I'm wrong. This is a very strong stock. Lots of orderly action here. Very tiny trend. So you can see this first red candle. I'm expecting this to be gobbled up instantly, right? We got one test, gobbled up. One test, gobbled up. If we slow down the gobble up, then I know I can get out of the trade on the next leg up, which is what I plan to do. But this is a pretty strong move. Again, new all-time high. It's breaking a major. This is a strong move. This is a major pullback, and we're breaking out here on heavy volume. There's some catalyst coming in here. Nothing really to worry about for the next couple of weeks. So I'm in Lily on this move up here. I am in Apple as well. I am long on Apple. The December 12th, 272.50 calls for $9.21. Took Apple over here Where is this? Let me get in on Apple. Yeah, got it in around over here. Probably gonna get a better price around VWAP, but got it over here. Stock pullback, tested some of these support levels right over here. You can see this is a major line. It fell down below, and then it finished and closed back up over here. There's a bit of a downward sloping trend line here, but this is a nice little volume pop on this stock. And it has potential to probably break through this high, and that's when I'll take some gains. I have an order out for $11.25 on Apple, so about a $2 gain in that guy. So I'm long Apple, and then I am long INSM. This is a biotech stock. It is not super correlated with the market, but it's through earnings. We have no sort of regulatory events coming up very recently, and a very steady grinder. So I got in on this stock end of day near VWAP. I got over here, and I took the 12.19 200 calls for $12.70. There's a pretty good amount of IV in here, about $7 of IV in the stock. So it can move around quite a bit, but it is a very steady grinder, pushing up higher. So as long as the market doesn't totally tank, I think this stock should be in pretty good shape, but it's been very resistant. I mean, here's the move here, pulled back, and then market has been moving lower. This stock has been grinding just higher and higher and higher. So I think, even on days where the market, look, this is a day market down, right? This stock is moving back up. IBB, as we pointed earlier, also very strong ETF. So I think this is one that is certainly leading the move in IBB over there. So I'm in this stock at 12.70. Got a good price. It's already up about $1 right now. And those are the open positions that are in right now. So those are all the swing trades. Let's now talk about some of the day trades that I took in the past couple of weeks. So I'm going to point out a couple of days that I felt that were maybe kind of helpful or maybe, informative, right? So out of the many trades I've taken, let's see which can be the most helpful. So let's start first on the 11/20th kind of day here. So here's 11/20th day. I see Tesla very early here, and let me actually pull up Tesla on that day. Let's pull it up over here. Right. So here's a setup I saw on Tesla. Market gap up, tested the gap, held this test, and pushed up higher. Right. So this is pretty decently bullish. And it's getting through this 674 level. Right. Now, Tesla, as the market is moving up, Tesla's moving up much higher, stronger portion of the market. It's getting through some of these resistance levels over here. So went long on Tesla right over here, and I took the November 21st 425 calls for $7.95. So, but at one strike in the money, just looking for a quick dollar on Tesla. Now, is this the absolute pinnacle D1 chart? No. I had a decent setup here. I also would have preferred to get off Tesla on this candle versus this candle. So that would have saved me a little bit of money. But yeah, so here's a setup of Tesla. So I think I probably missed the entry by a candle or so, which may have cost me. But I want to talk about, this wasn't a perfect day trade, but I want to talk about just me sticking to my technical decisions here. So SPY starts to break through the low of the day, and Tesla is at the VWAP, and it starts to break through VWAP over here. So I get out of the trade on Tesla on the 11 o'clock candle. So on the close of this candle, I get out of Tesla because I'm like, you know what? This is some pretty bearish price action. We made it the low of the day, and we are likely to have a bearish gap reversal because I wasn't well, at this point, am I 100% confident? No. But, Tesla failed easily enough, and the odds are great enough that I'm going to get the hell out of this trade because if it is a bearish gap reversal, I'm totally toast. So I take the loss on Tesla at $5. So I'm down $2.95 to start the day here. Now, I don't catch this move. But I am waiting for this bounce, and I do wait for this bounce, and I find some nice relatively weak stocks on this bounce. So I find a really nice setup on Uber, right? And if I look at Uber on this day, here's Uber on the D1 chart. It's been not super rallying, very, very choppy stock, and it's broken down a lot of support levels here. Some horizontal levels, the 200 SMA, fresh off the 8 EMA, breaking through some of that compression and coming all the way down to some support around 83 to about $82, right? There's some support over there. So this is Uber. It's coming down very, very strongly here, and then market starts to bounce, right? And look what happens on this market bounce. Market is bouncing. Uber is not really bouncing as much, remaining very relatively weak. And then on this candle right here, I'm short Uber. I take the 86 puts for, I think, $2. Take the November 21st, 86 puts. And I get in for $2.07. And I have a nice bearish trend day, and I have room on Uber all the way down to $83. So it's market pushing down over here, and then we start to get at this point actually 10P crossing down. There's a bearish cross after a benign bullish cycle and a strong bearish divergence over here. Bearish divergence, bearish confirmation, benign bullish cycle, and then a breakdown over here. We're getting through the 8 and the 15 EMAs. So when I see this, SPY is starting to roll over now here too. Uber is already confirming. I add to the trade. And I add to the trade at 245, so my average now is 226. I have 4 contracts here at 226. It's trickling down. And then when SPY gets close to the 100 SMA, we start to stall a little bit in SPY, stall a little bit in Uber. I'm out of the trade at this 155 candle. I'm out at 295. So I get out for pretty nice profit, 69-cent profit on a 2x size. And that pretty much almost makes up for my Tesla loss. So I want to point that out in the day where it's like I had this bias and I was wrong initially, and that wasn't particularly the best trade. So I got out of that trade. But on Uber, because I was able to take advantage of a strong market trend day, I didn't panic. I was just focusing on the next good setup. I made my money back, and I actually also shorted SPY here. So I made a lot of money back on SPY, and I finished positive for that day because I was able to take advantage of that opportunity. Now you could say, hey, look, well, you shouldn't have just taken Tesla long. And maybe you're right? I mean, there was certainly an argument to be made that it wasn't really the best setup, and maybe I wanted to wait, give it a little bit more longer time, or maybe take a long on this candle right here versus maybe this candle right here. It wasn't the best timing to get long. So that is what, there's some arguments there, but, you're going to make mistakes. So I made the mistake, and then I actually managed to pivot accordingly on this day and, again, take advantage of the trend and make a pretty nice win. So nice example of a long and a short, working or not working. Now I want to give another example here, and let's look at something like let's see if we can find more of a dead day here, or maybe this is a bullish day here in the market. A couple of interesting days in the market here. We have some gap ups moving up higher, and then some chop, gap up moving up higher, and then some chop. Let's see if I can find a pretty nice trade here. Actually, I'll talk about this trade. This was a pretty nice trade here. This was ZS short. So ZS here, here's the context in this chart. We had a post-earnings bear getting through the 200 SMA, real heavy volume, breaking the support levels, getting into this gap, which is this purple line. We have some high volume candles coming into play here as well. So there's ZS. You can see market has been bullish, and ZS is offsetting that bullishness with quite a bit of bearishness on that day. Okay, so there's ZS over here. So now market is looking pretty good, and then over here is where I short ZS. So I short ZS right here at 1040, and I'm short shares of ZS. So I am short, I think, 10 shares at 254.67. So get short here. And the reason I get short was like, all right, well, look, market gap up, kind of flat here. We're approaching near resistance. We've had a couple of days of gapping up in the row. So I can probably take a quick trade on a weak stock that's going against the market. So ZS is weak over here, and it pushes in a little bit lower. And I'm just looking for a move maybe to like the gap fill somewhere over here. So if I get in on ZS at 254.67, if I can take $2-3 on this stock, I'll be pretty happy. We get a nice move lower here, but SPY bounces off VWAP. And ZS looks good, and then it gets this kind of a candle. So I have a decision to make here that I could get a very tiny profit out on that candle if I wanted to. Or I can kind of wait it out. So I decided to wait it out. This stock pushes up a little bit higher, kind of flattens out over here, and then it starts to push down over here. And I get this nice confirmation signal with this yellow arrow, which means the 8 is crossing below the 15. So now I have a decent setup on ZS. And typically on this kind of trade where it's like, all right, it breaks to the 8, breaks to the 15, it's kind of through VWAP over here now. I'm just waiting to see how this looks like when it rolls over. Because this is a strong trend. I do have the 200 SMA over here, so I'm just watching to see what's going to happen on this guy. And it stalls over here, right? Gets dragged up by the market a little bit because there's a bullish cross that pretty much produces right away. So that goes against me. And then on this last leg of the market rally, ZS starts to stall over here at the top of the gap. And then when the market rolls over, this stock also starts to roll over here. So I add to the trade. I add 10 shares of ZS. At 285.12, so my average becomes about 256.40, right? Which is kind of right around here, right? So watching it here now, market is trickling up a little bit. You can see that ZS kind of just pushes back down here, not really that much, and then pops back up over here through VWAP. I'm just gonna hide these drawings right now just to make it a little bit easier. So it pops over here through test VWAP over here, and at this point I'm ready to cut the trade, right? We're like kind of chopping right along VWAP here, and if it had a green candle like that, I'd probably get out of the trade because you know, it would be too it would get too bullish at this point, and I've got the stock wrong, right? But it's kind of chopping around here. We see these crosses back and forth, which means we're just getting chopped up on that indicator, and then I draw this trend line on ZS kind of right like here, right? And I'm like, all right, if we break through this trend line, then this is probably where it's probably going to flush out over here. And if I wasn't already added to a position that went against me, I would have added here. But I've already added once, so I'm not going to add again to that position. So ZS broke through that trend line. We had this hammer, which I wasn't a huge fan of, but I was like, all right, well, we've got a nice poke above through. Tested this low. Let's see if we get some follow through. Got some follow through, and I got out of this trade at 25.10 for a $1.30 gain per share on that. And I want to point out that trade because, again, it's like I picked a pretty good stock. I just got the market wrong, but I was leaning on two things. One, because there's going to be a pre-holiday session, and I knew the nature of this move, it's probably going to fizzle out and go sideways. Now, if it fizzles out and goes sideways, I know ZS is weak enough that as long as the market just goes sideways, this stock should probably start to leak lower and fall down. I don't know if it's going to make a new low of the day. It might even make a lower high, but I'm just going to, I probably have a decent chance to take profits. The problem is I'm going to have to add because I'm probably not going to be able to get that at my original price. So I need to wait till the stock shows relative weakness. It is bearish on a through VWAP, right? And below that 8 and 15 EMAs. So when I get all this criteria, I can add to the trade. So I added the trade here, which I got all the criteria. One more poke back above, couldn't quite get to VWAP, right? Offering here, and then we sold off here, took some gains, and it still produced towards the end of the day. There was a member, I think, in the 10P or RDT chat room, they took it here, and I think they took it out at the end of the day for some really nice profits on a PDS. But it was a pretty decent one on ZS. All right. Okay, so those are a couple of day trades I'll go over. The rest will be in the trade logs. I'm not going to go over all of them, but the general rule is, you know, just looking for strong stocks, strong and weak stocks a lot throughout the day. In this case, we have a bullish trend, so I'm going to look for some strong stocks generally. You want to trade in the direction of the trend, line up those cycles over here, and try to time them pretty well. I think on ZS, you could see that I pretty much got in at the end of the main trend cycle. I had to withstand a whole contra cycle. Contra cycle, take this here, another contra cycle, and then I got the flush out over through here. But I didn't sync it well with the market, so I had to pull some trade management Houdini to get myself out of the trade. So, yep. Well, that is it for this trade review. I know it is a very, very long one, but it is one that is long overdue and one that I wanted to get out. So, hope this was helpful. Hope this, hope you guys can learn from this and use some of these things in the trading. And I will see you all in the next trading review.